Buying your first home is a massive challenge for people these days. In recent years, we've seen property prices rise steeply, and the bank of mum and dad is more and more important. What does the term bank of mum and dad mean? Well, it's pretty straightforward. In terms of borrowing, it means Guarantor Home Loans. I'm going to give you a rundown of today's video, but before I do that, I want to share something with you that could help you out a lot in your first home buying journey, and that is our online community for first home buyers based in Melbourne or Victoria. It's a place where you can ask questions and get the answers you need. I created it because just Googling stuff can give you the wrong information quite a lot of the time. Anyway, the link is in the description, so get in there now and join the community. To understand what a guarantor is, you need to understand how a loan works. Now, if you've just watched my video on how much deposit you need to buy your first home, or the guarantor one, you could probably skip forward to the next chapter because I go into that in more detail in those videos. I'm going to explain how a guarantor gets around the low deposit situation and the lender's mortgage insurance. I'm going to explain how the Guarantor Home Loan works, what the risk is for the guarantor, and how the guarantor actually gets removed from the home loan. So how a home loan works traditionally if you've got a low deposit. So 5% deposits have been around for donkey's years. So basically what happens is you're allowed to put 5% down, but you've got to cover the costs of buying the property. So what actually happens is that if you've got 5%, then you're going to pay mortgage insurance, which is what the bank takes out to cover their risk because they're putting in such a large portion of the property. They're providing more lending. How that loan works is when the bank gives you the money, they're holding the property that you buy as security. So what that means is if you can't pay the loan back, then the bank can come along and they can sell your property and then they can get their money back. The reason why they need mortgage insurance is because if they sell that property and they don't get all of their money back, then they've lost a lot of money. So the mortgage insurance covers the bank in case of any loss. How a guarantor works is you've got a family member, generally a parent, and what they do is they put their house up to go co-security against the loan. So what happens is the bank are really happy now because they've got a lot of property that they can sell and they can be sure that they can get their money back if you, as the borrower, don't pay the loan. So what's the risk of the guarantor here, guys? Because I bet you a lot of you guys are asking this question. Well, obviously the risk is that if you don't pay the home loan off for whatever reason, after a while you'll default, there'll be a legal process, but then worst case scenario, they will sell your house to try and recoup their money. So let's say, for example, they sell your house and they're still, 50 grand short. So now the bank are 50 grand down. So they go to the guarantor, your parents or whoever's putting the house up, generally a family member. They say, hey, the home loan hasn't been paid. You're on the hook for 50 grand. We need that money. Worst case scenario, if your parents can't come up with that money or whoever the guarantor is, then they have to sell that property from under them. That rarely happens, but that is the risk involved. The question of how do you remove a guarantor from a loan? Well, most lenders will simply just remove the guarantor when the loan becomes 80% of the value of the property. So that can either happen in a couple of different ways or a combination of those. So either you just pay the loan down so that it's 80% of the value of the property, or the property goes up so that the loan is still 80% of the value of the property. Generally, it's a mixture of both. So depending on how long you think it'll take for the property market to go up, then the guarantor is going to be on the hook for that period of time. By the way, guys, if you're finding this information useful, you might like to watch the video I did on deposits. I also have another video on the first home guarantee available nationwide, so please subscribe to the channel to get further updates. Don't forget to join our first home buyer community, link in the description.